Namaste. Good morning. Welcome to 83rd episode of series. This is a weekly series, and we are continuing. We are continuing with for the last 3 weeks. This particular week has been very important. On 1st of November, the Insolvency and Bankruptcy Board of India released a discussion paper on various proposed amendments on corporate insolvency resolution process. On 6th of November 2023, there was another discussion paper which was released by IBBI on various issues on real estate projects. Now, these real estate discussion paper would be implemented by way of amendments in CIRP regulations and in liquidation regulations. So this is the discussion subject. First, we will discuss the discussion paper on corporate insolvency resolution process dated 1st of November 2023, and then we would be discussing the discussion paper on real estate issues and how the IBBI is trying to resolve this. That 6th of November, that we will discuss after that. Not a very large amendments, not very but I believe we'll be able to cover. However, of this that we will seek suggestions to IBBI. So therefore, Ankit, would you like to say anything on this?
Yes, I think these amendments are very, very important to understand for all professionals and all participants in the insolvency system so that they can give their feedback to IBBI with respect to the prospective change. And I think that is the basic objective of this discussion paper, to get all the views on the table so that this amendment takes care of these issues once and for all. So not only limited to the professionals, maybe the industry, people in the industry, prospective resolution applicants, SRAs can also give their opinion on how these sectors and what are the effects that can be taken care of.
So I would start with the sharing of my screen, Ankit, and we can take up. Yes. So we've already said the preamble of today's discussion. So the first, we are starting with the discussion paper on corporate insolvency resolution process. So there are primary objectives of this discussion paper. One is to safeguard the interest of the creditor, then to streamline the process and to improve the monitoring of the committee of creditors on the CIRP process, to make the CIRP process effective in the timely manner, and to promote time-efficient mechanism to improve the valuation methodology, to ensure smooth continuity of the corporate debtor, and to seek clarity in the process of better understanding, and to safeguard the interest of the stakeholders. Now, the major amendments which are proposed is one, that the operational cost of the company running, for keeping the company as a going concern, there was some difference of opinion whether it requires the approval of committee of creditors. Now, this is one subject. Then is the monthly COC meetings are proposed. Then the valuation methodology and report, that is also, and the disclosure of the valuation report. Then coming to the continuity of the process, like there are some things which are already in practice, on the minimum entitlement to financial creditor, so mandatory contents of the resolution plan. So then we take up one by one. So the first subject that we are going to take up is approval of the committee of creditors for insolvency resolution process cost. No, this is of course is required, but the subject which is dealt in this paper is that the CIRP cost on keeping the company as a going concern. So that includes operational losses, that includes even those expenditure which were earlier being conducted, being done by the corporate debtor, which is not a part of the that is something which is the operational expenses. Now, if a company is running, there are operations going on. So there are purchases every day. There are sales. The company is earning revenue. Company is making payment of salaries, a lot of payment to the consultants, transporters. So various expenditure, and that is being done by the companies wherever the operations are continuing. So the difference of opinion is whether all these expenditure that we do, would that require the approval of the committee of creditors? So far, the law was not clear, or rather, I have seen that the most of the RPs were not seeking approval of the committee of creditors. Gradually, what started the pronouncement that the RPs started taking approval of continuing workmen, continuing employees, whether the rented premises had to continue or not. But all these small permissions started like when the judicial pronounced. But this particular amendment, the now the IBBI have proposed that the cost of keeping company as a going concern, the existing regulation 34 says that the committee shall fix the expenses to be incurred by the RP, and the expenses shall constitute insolvency resolution process cost. Now the proposal, what the proposal is in this case, that the insolvency professional should seek approval of all components of CIRP, including expenditure incurred for ongoing operations. So the regulation 31 capital A in CIRP regulations, that is already there, but regulation 31 capital B would be inserted, which is with the heading approval for insolvency resolution cost. The insolvency shall place before the committee the operational status of the corporate debtor and shall seek approval for all expenses, including the expenditures incurred in running the business of the corporate debtor as a going concern, which are part of insolvency resolution process cost from the committee. Now, if we read it carefully and with our own experience added to it, what I understand is that the RP now is supposed to present before the status of the operation of the company. When I say the status of the operations, that actually means what is the present revenue, what are the present expenditure, and what is my projected revenue, what are the projected expenditure. All this will have to be presented before the committee of creditors, and the committee of creditors will take a decision whether to continue the operations or not, whether to continue the workmen and employees or not, whether to continue sale and purchase or not. So all this decision will be taken based on the status of the operations given. Then I still don't see that creditors would say to RP, each purchase making, you should first the committee of creditors for approval. The overall status of the operations would be the expenses incurred, as in operations, that would be brought to the committee of creditors. Headwise estimate of the expenditure would be presented to the committee of creditors, including the security, including various professionals which are being appointed regularly by the corporate, presented, and it will be approved by the committee of creditors. Then only the RP will continue the operation, and then only the RP will, or in case has to do that, and then it will be presented before the committee of creditors for ratification. If the expenditures have already been incurred, it will be presented before the committee of creditors for ratification. This the change is happening. I have seen in some of the cases, even when the RP replaces the security guards, the existing security agency is replaced with another security agency. Some of the resolution professionals were not getting the approval because they were saying that these are the operational expenditure. This is not the CIRP cost. This is not a process cost. So now the IBBI have made it clear every expenditure, then based item-wise expenditure, item-wise revenue, loss or profit, that has to be approved by the committee of creditors after the discussion. So this is where the first amendment is coming. Any observation, Ankit, that you would like to add?
I think this is a very very small tweak, which is
Okay,
just
so
bringing in the practice as on date inside the law. So I think these ones, we can, yeah, this is something that is already in practice very much.
it is already in practice to I think 80-90% it is already in practice. The committee of creditors, in fact, they seek this kind of information from the RP, then only they approve the expenditure. So this is a little clarification only. This is little clarification only. Now there is the second proposed amendment is monthly COC meetings. The presently section 12 says that CII is designed to be a company within 80 days to ensure timely resolution. COC meetings are the basic place where all the decisions are taken, COC, and also on the recommendation of the RP. Now, there are some feedback which has been given to IBBI in some cases that there are gaps between two meetings, and that is too much to be kind of accepted. There in some of the meetings, these IBBI have noticed that there is a gap of more than 6 months in two meetings. Significant gap conflicts with the intended agility of the process, prolonged gap between the meeting, delayed decisions. So based on this, the CSTO, the IBBI have now proposed, and the amendment is proposed in Regulation 18, Sub-Regulation 1 of the CIRP regulation, and this regulation is amended now, and a resolution professional may convene a meeting of the committee as and when he and not more than 30 days should elapse between the date of one meeting and the date of next meeting. That actually means that you can have a meeting at a shorter gap, but you between two meetings, which is more than 30 days. You can have a meeting, can't have a meeting after 33 days. So there should not be a lapse between date one, this is the gap between one meeting and the other meeting. So this is a proposal. So I believe this is not that bad, because I have experience in AAA where we have handled the processes which are more than 225. We have not seen any gap of more than 30-35 days, and in many cases where some kind of stays are there, maybe 40 days. So that is what they see. But the only issue is that when the COC approves the resolution plan, when the resolution plan is approved by the committee before the NCLT. So what I feel, at that particular time, the company, if the company is closed.
So there is a feedback that your voice is cracking. I was earlier thinking that it is maybe my system's issue, but I'm getting that feedback from others also. So maybe there is a possibility of some problem with the network. So you can change the network so that the voice is better. Currently, it is not very audible.
Only thing that, but we have installed here Wi-Fi that actually is also working. So is it better now, or is it breaking, Ankit?
It is big. It is better now, but in the middle there are stages when it kind of breaks. So one of the options is that you can switch off your video and then try. that might make it better, so that we can, continue and still try without the video.
I believe the problem is that the Wi-Fi is a problem. So I can actually do that. I can even switch off, and then you can give me the feedback in between wherever it is. Now this the 30 days gap is something that is presently the maximum, and it cannot be kind of less than that. So where I believe the suggestion that we would like to give is that where the committee of creditors decide that now the status of the corporate insolvency resolution process is such that there is nothing to be decided on month-to-month basis. Therefore, the meetings can be, the gap between the meetings can be increased. So that option should be available with the committee of creditors, so that in certain circumstances, when there is nothing happening, then in that case, there should be some kind of possibility of avoiding this repetitive work. Because in case I have many cases where the resolution plan is submitted for the last 2 years and it is pending before NCLT, and otherwise there is nothing happening in the corporate debtor level. So therefore, this is something which I feel that there should be some provision that the committee of creditors should be able to decide the frequency of the meetings. This is what I feel. Ankit, is it better voice now?
Yeah, it's much better, much better. It's very clear. So yes, I believe there should be, like this. It should be like I can relate it to the notice period that is required for, having a meeting. So it would, in normal circumstances, be 5 days, but the COC can choose to make it lesser. So that kind of an amendment should be okay, so that the COC has the power to either have the RP come to them and report about the COC process, about the CIRP process within every 30 days, or they can say that, okay, let's make that 30 days 60 days. So giving the COC the power is also important, because there might be some expenses relating to the to having the COC, maybe not too much, but those expenses are also something that might be avoidable at sometimes.
So moving on to the next discussion, which is discussion of the valuation methodology and the report with the committee of creditors. So presently the valuation report is shared with the COC members only after the resolution plans are received. So the COC normally would not have much understanding about the valuations of the assets or the businesses of the company. So the various feedbacks which has gone to IBBI is the information is not available with the committee of creditors while they are taking a decision to decision about eligibility criteria, evaluation metrics, and some other conditions of RFRP. And therefore, the disputes are raised by the members regarding the methodology also. So to reduce, there is now some kind of amendment which are proposed to reduce this kind of. It is now said that before the finalization of the valuation report, the valuers shall explain the valuation methodology to the COC in a meeting facilitated by the RP. So the amendment in Regulation 35 of the CIRP regulations, that has actually been completely redrafted. Now it is saying fair value and liquidation value shall be determined in the following manner. Two registered valuers appointed under Regulation 27 shall submit to the resolution professional an estimate of the fair value and the liquidation value computed in accordance with the internationally accepted valuation method after physical verification of the inventory and fixed assets of the corporate debtor. Provided further that the registered valuer shall explain the valuation methodology to the members of the committee in a meeting facilitated by the resolution professional before computation of estimate. I think this was also earlier required. So let me see what exactly is the change. So I don't think it is the only change. This was earlier also, but that was in a different regulation that the valuer,
The last proviso is the addition, which says that provided that the registered valuer shall explain the valuation methodology to the members of the committee in a meeting facilitated by the resolution professional before computation of estimates. So that basically makes registered valuers accountable for the valuation methodology that they're using to do the valuation. This is what is the change. And previously there was no requirement at all for the registered valuers to come before the COC at all.
There was a requirement, na? There was a requirement, and we've been seeing that requirement. So what I am trying to understand is there was a requirement. I'm trying to find out the regulation. So because of this video which is
The,
available, I'm
the
not able to. So we are understanding that there was a requirement, but then I'm not able to go to the. Uh, let me try. So if this is also the discussion paper. This is a discussion paper. So the methodology word was in any case. So even otherwise also, we used to get this kind of meetings. Earlier it was, I'm not sure, but then yes, now presently, this is what we have in hand. So do you recall, Ankit, where it was already there? Because see, we were having these meetings already with the valuers, and this was the requirement of the regulation that this is required. Now they have provided in Regulation 35. But anyway, earlier also we were having meetings where they were having the rights to know the valuation methodology. But now there is another significant change, that is the disclosure of fair value. They are proposing that the disclosure of fair value would be there in the information memorandum. So uh, although the COC should be prepared enough to understand what kind of resolution plans they are likely to receive and what is their expectation, that is something which is very important. Transparency, the disclosure of fair value, because see, in case the prospective resolution applicant also should know what is the kind of valuation is there in this company. Somebody has to analyze his own capacity, his own understanding, whether he has the complete understanding of the assets. So the fair value is not that part of the information which will be provided to the prospective resolution applicants as part of the information memorandum. Now, the issue is very, very serious here, that the information memorandum is supposed to be out and the valuation report is something which normally gets delayed. Now, the valuers, in fact, will actually get a lot of stress because, see, in case they delay, see, the information memorandum presently, I think it is required to be given in 95th day. So within 95th day, we have to complete the valuation. So Ankit, how do you feel that when you get appointed only after the RP is appointed?
Yes, we normally get appointed at the 47th day from the CRP date.
So 47th day is the normal, but where the RP's appointment is held up with NCLT and the order is not expected, RP starts functioning. Even after the COC approves his name as RP, The RP start functioning after 40th day. 47th day is when you get appointed. And now the information memorandum is supposed to be shared with the COC. That is now 95th day or 100, maybe 95th or 105. So the only the gap is 47th day is the appointment, and then the only within say 30 days, in case the all the assets of the company, all kind of valuation is supposed to be completed. So this is where is the challenge now. So the information memorandum, so the valuers will have to take up the appointment only in case the valuer has time.
But then
My
but
experience.
here the difficulty is that there are significant times when the valuer is appointed for the 47th day, but the COC has not approved their expenses. And in those cases where the valuer has not been, the COC approval has not come in, the valuers normally who are understanding the IBC process will not go ahead and work. They will keep asking the RP that, or keep telling the RP that we will work only after the COC approves our fees. Otherwise, why will they make the investment of visiting the premises, doing physical verification from their own pocket? That becomes
In
a very
some
difficult
cases,
exercise.
even in some cases where they change the IRP or they change the RP to another RP, in all those cases the value is also being changed by the new RP.
Yes, that is also happening. So today there is no option. If somebody else becomes the RP and the erstwhile IRP had appointed valuers, and those valuers are not willing to decrease the fees, then they will, there's no option but to appoint other valuers on that ground. So here my understanding is that the the first version of the IM may not have the fair value at all if this is the process that is followed. But at any point in time in future, after the valuers have been appointed, after they have visited the premises, maybe at that point in time, the resolution professionals will have to revise the information memorandum for the fair value so that the prospective resolution applicants have an idea about that value. And before that, the resolution professional will simply have to say that he's not in a position to disclose the fair value because the valuation has still not happened.
So in case we really want to achieve the objectives of the IBBI, then in that case, the valuation has to be completed within 30 days. That is what
Yes.
is my focus today. Like I am
And it
saying,
is feasible. It is feasible. It is feasible subject to a lot of things, subject to the idea that the valuer fee is approved by the COC in time, subject to the idea that of course, cooperation from the CD, the erstwhile management also becomes very important. A lot of cases where valuers ask for very, very relevant information for valuation, they do not get that information because the CD, erstwhile management is not cooperating. 19 applications are pending and all that. So those take time. So in those cases, the fair value estimate, even if it comes out, might be incomplete.
so like, and DC, the amendment is proposed in Regulation 36, which provides the information which is required to be incorporated in the information memorandum. That Regulation 36 is changed, and as sub regulation M, the word fair value has been added. Now the fair value of the overall company. So why it is restricted to fair value? I mean, there may be now a case there is a different information memorandum is being prepared for different projects of real estate. So it is only the fair value. So the fair value has been added here. So now, like this is the then we are going ahead with the continuation. The next amendment which is proposed is the continuation of process activities pending disposal of extension application. This is a very, very simple clarification. Otherwise, in most of the cases, the application for extension is first of all filed after the approval of committee of creditors, and the RPs are continuing working as per the process. And I haven't seen any cases where the RP is stuck up and is waiting for the order for the uh, extension. However, this clarification is a welcome clarification. So there is nothing much to be discussed. So in the process, when the extension is approved by the committee of creditor, it is not approved by NCLT so far. The RP is supposed to work normally and will not have to wait of the order of the adjudicating authority. Because some of the RPs, I have seen some of the opinions that has come that when the time of the CIRP is not extended. It is only the COC. And how can I work because the time is already expired? I'm not an RP now. 180 days have expired and I have submitted the application before 180 days and it is not extended. Am I an RP? So this is only a clarification, but then most of the cases, they were assuming that the extension is granted. So this amendment is also a kind of clarification and it is also come as a clarification. Now, this part is slightly important. The proposal is clarification in the minimum entitlement of dissenting financial creditor. So there are two, one section 30 subsection 2 and clause B deals with it. And the second is regulation 38 deals with it. So the presently the section 30 subsection 2 and clause B of mandatory contents provides that the resolution professional shall examine each resolution plan received, provide for the payment of debt of operational creditor in such manner as may be specified by the board, which shall not be less than, this is for operational creditor. And then the next is whichever is higher, and provide for the payment of debt of financial creditors who do not vote in favor of the resolution plan in such manner as may be specified by the board, which shall not be less than the amount to be paid to the creditors in accordance with subsection 1 of section 53 in the event of liquidation of the corporate debtor. So in this section 30 subsection 2, it is not provided that what exactly is the to be paid to the creditor in accordance with the subsection 1 of section 53. One, that there is no word priority of charges, that is not mentioned here. And then in case we see the existing regulation 38, it says that the amount payable under the resolution plan to operational creditor shall be paid in priority over the financial creditor. To the financial creditor who have a right to vote under subsection 2 of section 21 and did not vote in favor of the resolution plan shall be paid in priority over financial creditors who voted in favor of the plan. So in regulation 38 also, there is this much is written, which is like as per section 53 only. Now, the feedback which is received by the IBBI is that the stakeholders have expressed difficulty in determining the extent of what is the payment in priority in terms of regulation 38. Payment in priority was actually meant that first of all, dissenting creditors will be paid. Right? First of all, operational creditor is paid, there is no dispute about it. But the payment in priority was actually considered as the payment which is first to be made to the dissenting creditor and then to the assenting creditor. This clarification is a significant clarification. We'll come to the what clarification has been given by IBBI. The term realizable amount in the event of liquidation when the resolution plan has been approved is not defined under the code, realizable amount. Because see, what is written in section 30, subsection 1 is the amount, the amount to be paid. So realizable amount is also not mentioned in the amount distributed under resolution plan had been. So that is also required a kind of definition. Since the liquidation value as described in the CIRP regulation represents the amount determined at the start of the insolvency proceeding. So there is a concept which has been given as a brief to the IBBI that normally the liquidation value is assessed at the beginning of the CIRP. So there can be various reasons that the value during the CIRP further dilute. It is further eroded. Maybe because of the recurring losses, maybe because of the closure of the business during CIRP, maybe because of the change in the market circumstances, maybe because of the erosion in the value of the assets. So there are many reasons that the liquidation value as on the commencement of CIRP is higher than the liquidation value as on the commencement of liquidation, because the section 53 is applicable only during liquidation. It is not applicable during CIRP only to unless it is mentioned specifically as it is mentioned in section 30 subsection 2 clause B. So what the difference is, in some cases it has been seen that the dissenting creditor is actually getting more than what assenting creditors are getting, because the assenting creditors are getting the kind of what is mentioned in the resolution plan, whereas the dissenting creditor is getting the proportionate liquidation value as at the commencement of CIRP, whereas the resolution plan has actually factored in all those losses and all those things that I have already mentioned, which can be the reason for erosion in the value of the company during the CIRP period, like the depreciation on the assets. And like this is all the, so the where many cases which are under dispute, that the dissenting creditor says that my entitlement was higher and I have not been given my appropriate share. Now, this is then an example which is given in the discussion paper, that when we see the assent to a resolution plan, in that case, the first is whatever mentioned in the resolution plan he will get. And in case it goes for liquidation, the assenting creditor will get the value, whatever would be distributed once the assets are realized after deducting the liquidation cost. Now, especially in the changed scenario, when the provident fund dues are supposed to be paid 100%, superannuation fund dues are supposed to be paid 100%, gratuity is supposed to be paid 100%. So in this manner, the liquidation value as on the commencement of CIRP would be only the value of the assets and the businesses. It will not consider the liabilities. For example, the liability of CIRP cost, the liability of PF, liability of gratuity, liability of superannuation fund. Now, after this Jet Airways and also with the Sawan Godiwala judgment or of Moser Bair judgment, it has been clarified that the PF, gratuity and superannuation fund has to be paid 100%. So, in such manner, the liquidation value as arrived by the valuers would not have factored in all this, because the liquidation value is all about the assets and not about the liabilities. Whereas the distribution as per section 53 would be made after deducting all these expenditure, all these entitlements, CIRP cost, workman dues, everything will have to be reduced. And of course, in case of rainbow paper, they also will become secured creditor. So all this will actually be not known to the valuer at the time of assessing the liquidation value. So therefore, there is a huge gap between the entitlement of a dissenting creditor in a resolution plan and entitlement of a dissenting creditor in a liquidation process. That gap has to be reduced. So this is something which is very important discussion, very important amendment. That gap has to be reduced. The gap between the entitlement in two scenarios: one where the assenting creditor and dissenting creditor, whatever he will get in liquidation, whatever he will get in the evaluation. Now, the proposal that is here, actually that brings two things. That brings two things on a clarity, because see, there are many judgments like Amit Metallics. It's a Supreme Court judgment, and it says that the dissenting creditors are not supposed to have a higher benefit than the assenting creditors. Therefore, even the exclusive charge holder, they have not been given the value of their property fully. They have been given only the proportionate value, and the Supreme Court has also upheld that they cannot get benefited by just dissenting a resolution plan. But now, because this has become a very big reason for disputing the resolution plans, because most of the exclusive charge holders, most of the first charge holders are in fact suffering in case they dissent or they assent. So this clarification, now the clarification that they want to provide is that the entitlement of a dissenting financial creditor will be the lower of the following two. One, the amount that would have been paid to such creditors if the amount to be distributed under the resolution plan had been distributed in accordance with the order of priority in subsection 1 of section 53. The order of priority is yet to be discussed, is yet to be decided by Honorable Supreme Court, because that is pending. What is the order of priority? Now, the order of priority, whether the exclusive charge holder will get the priority over that asset, or they will get the order of priority on the overall liquidation value. Similarly, whether the second charge holder or first charge holder, because in the order of priority is also mentioned here. Now, the liquidation value as defined under these regulations shall be been distributed in accordance with the order of priority in subsection 1 of section 53. So that is what is the liquidation value in the order of priority. So this order of priority definitely takes care of the voting power and the order of priority, like secured financial creditor or unsecured financial creditor, but it still doesn't talk about whether the exclusive charge holder will get the value of that asset, whether the first charge holder will get the value of that asset which they have in their possession or in their custody or in their control, or what they are, where they have mortgaged to them. So this clarity is still needed, but adding the word of order of priority is important. Earlier, this word was not there. In Regulation 38, the order of priority word was not there, and now they have added this order of priority. That actually means that the intent of the lawmakers is that they would like to see the order of priority, means the first charge will get first and second charge will get later. But the exclusive charge, one, and the value of the security interest of each secured creditor, that has yet to be decided by the Honorable Supreme Court. Therefore, order of priority is mentioned here, but value of security interest of each creditor, that word is not mentioned. Value of security interest of each creditor is not mentioned. So therefore, the order of priority can be one pari passu for all the secured creditor and pari passu for all the unsecured creditor. However, within the secured creditor, one has a security value of 80% of the debt and the other have 5% of debt. Whether they have the entitlement of 80% and the other has a 5%, that is not clarified, and that matter is still pending with Honorable Supreme Court. However, order of priority word is added in this proposed regulations. So, Ankit, here, in case you feel that is something different can be observed from this word order of priority, because this word was not there.
I think order of priority, there is a priority in section 53. So I think that's what they are talking about. But I think it's only, I'm not really able to understand that if we simply not refer to order of priority in section 1, and then we talk about section 53 as, in general, how does it really make a difference? Maybe I'm missing something here. But order of priority, how does writing order of priority make this, because I think there must be some judgment which is talking about or interpreting section 53 in a specific manner, where the order of priority mentioned in section 1 of section 53 itself has been changed. That must be the idea.
So the scenario here is like we are still waiting for that order. I don't think this particular amendment will resolve that issue of the value of security of each creditor. That is pending. However, the order of priority is all decided that the order of priority will stay. The first charge holder will get first charge and second charge will get first charge. However, the value of security interest of each creditor, whether that will be considered or not, that is very important.
There was
So that
perhaps
is
there was perhaps some confusion that section 53 is only applicable to liquidation and so on. So I believe that's where this has come in, that in case the resolution plan is bringing in some X value and that is not distributed if that is distributed in the order of priority in subsection 1 of section 53, then what will be the values? So I think it brings more clarity to the original thought process that yes, section 53 waterfall mechanism is also required to be complied with for the resolution plans that come in. And wherever they will not come in, they will not be compliant. This was the original thought process, but I think it was diluted a little by some judgments.
So now the proposed amendment here is that the definition of amount due in the event of liquidation, that is being added in the regulation 2. the definition which is proposed here is that the amount due in the event of liquidation shall mean the lower of one. The lower of one is the amount that would have been paid to such creditor if the amount to be distributed under the resolution plan had been distributed in accordance with the order of priority in subsection 1 of section 53, or the liquidation value as defined under these regulations been distributed in accordance with the order of priority in subsection 1 of section 53. Now, lower of these two, that would be the amount due in the event of liquidation. Amount due in the event of liquidation is already there in section 30, and it is already there in regulation 38. Now that amount due in the event of liquidation is decided, which is lower of 1 and 2. Then the regulation 38 would be substituted in this manner, that the amount payable under a resolution plan to the financial creditor who have a right to vote and did not vote in favor of the resolution shall be paid amount due in the event of liquidation in priority over financial creditor who voted in favor of the plan. Now, in priority over the financial creditors who voted in favor. Now, what was happening in the last 1 or 2 years, that the dissenting creditors were in fact beneficiated, because most of the resolution plans are coming very close to the liquidation value. Now, these dissenting creditors, they were saying that dissenting creditors should get the exact proportion of the liquidation value. Whereas the committee of creditors is not really interested in giving the dissenting creditors the benefit. So that was the reason for the feedback. So therefore, amount due in the event of liquidation is now defined, that in case the company goes into liquidation and whatever he would get, that is the option 2, and out of these 1 and 2, only the lower will be payable. The clarification that is actually given, it is clarified that at no stage of implementation of the financial creditor, the financial creditor who voted in favor of resolution plan shall be paid higher percentage of its dues than the financial creditor who actually who did not vote for the resolution plan. So the illustration is very important. So far, the market, the insolvency professionals, the bankers, they were thinking that the dissenting creditors will get on priority as against the other assenting creditors. Means that they will get first whatever is payable to them, and then only the distribution to the assenting creditors will start. But this clarification is very, very important, that the assenting or dissenting creditor will be almost considered as pari passu when the distribution is being done. If 50% is being distributed to all, that means to all, and that it is rather made, it cannot happen the vice versa. It cannot happen vice versa means that it is not possible that a dissenting creditor doesn't get any payment and the assenting creditors are distributed some amount. So they are saying that in case the 50% of the resolution plan amount has been realized and the 50% is being distributed, then everyone should have 50% and then 80% and whatever. So this example clarifies that even during distribution. So what I'm trying to say is the dissenting creditors would be losing their interest in dissent, because first, they will not have any priority over the other secured financial creditor, and number 2, they would not be having the benefit of saving on account of PF, gratuity, superannuation fund, tax dues, and also the liquidation cost and the CIRP cost. So these benefits they will not get, and so therefore the amendment is in fact a very, very important amendment, and it will reduce many disputes. Now, the mandatory contents of the resolution plan. Mandatory contents of the resolution plan have also been changed, and Regulation 38 of the CIRP regulations outlines the mandatory contents, which talks about the stakeholders' interest, applicants' detail, and all that. Now, the feedback which has been given to the IBBI in the last 6 years is that in most of the resolutions we have seen that there are kind of issues related to the claims, and which finally becomes the issues related to the distribution, issues which are not yet decided in some of the cases where some disputes are pending in some other court. So therefore, the distribution which is proposed in a resolution plan cannot be considered as final because of some of the disputes of claim, some of the disputes of admittance, some of the disputes of the priority of charges, some of the disputes of the security interest. If all those are pending, the resolution plans are not possible to be approved by the committee of creditors because of those applications. So therefore, the effort the NCLT was making, that first dispose of all the applications and then approve the resolution plan. But now, with this proposed amendment, it will be possible for the committee of creditors first to decide whether the resolution plan will have two parts, like as proposed in this discussion paper, like part A and part B. In case the resolution, in case the committee of creditors think that the circumstances of this company is that the part A should be separate and part B should be separate, then the resolution plan can be invited in this manner, that first part A and then part B. So in that is something which is a very, very welcoming change, that even in most of the real estate cases, the resolution plan must be approved. As far as the total dues are concerned, that must come. As far as the distribution is concerned, that can take some time, and the money can be deposited in escrow account, interest-bearing escrow account. So this is what is the amendment. Like in case of any dispute regarding the claim, security, interest, entitlement, which is impacting the entitlement of distribution under a resolution plan, those all disputes can be kept separate, and the resolution plan can be implemented and can be approved, and then the distribution can happen later. Now, the part A, what is proposed in the part A is the payment under the resolution plan. Total value of the resolution plan should be there in the resolution part A. CIRP cost is not depending upon the other things. So therefore, the CIRP cost can be paid in part A, payment schedule, feasibility and viability of the resolution plans. And then the part B actually would be, part B would be the first. So now the way it is proposed, that the second part shall deal distribution among the various stakeholders. The disputed amount may be kept in an escrow account. I believe some clarification should have been given, like escrow account with what would be the agreement and with whom it would be. That clarification is not there, so it will be a kind of judgment of the RP and the committee of creditors. Now, in this case specifically, the resolution plan shall deal with the following in part A: selection of RA, background terms, implementation, feasibility and viabilities, approvals required, means of finance, and the amount paid to the insolvency resolution process cost, total proceeds by resolution applicant, and the means of implementation, including escrow management. Part E would be like shall deal with the payment to be made to the other category of the creditor. The amendment is proposed in Regulation 38 of the CIRP regulation, and it says that the mandatory contents of the resolution plan shall have two parts. One part would be part A, shall include the total realizable value being provided under the resolution plan, payment to be made for CIRP cost, the term of the plan and its implementation schedule, the management and control of the business of the corporate debtor during its term, the detailed overview and experience of the RA, sources of funds and its utilization, statement giving details if the RP or any other related party has failed to implement or contributed in the past, and that is the profiling of the RP. Then adequate means for supervising in the implementation, then adequate means in supervising the fraudulent and like perfect transaction. So if it addresses the cause of the default, if it is feasible and viable, has provision for its effective implementation, and it has provisions for approval required, wherever. Part B will say the statement as to how it has dealt with the interest of all stakeholders, financial creditors, and operational creditor of the corporate debtor. Part B will further say the payment to be made to each category of the creditors and each stakeholder against their admitted claims. The amount payable to the operational creditor shall be paid in priority. The amount payable to the financial creditor who have right over other did not vote in favor of the resolution plan shall be paid in priority over the financial creditor who voted, provided that the committee shall recommend whether a resolution plan prepared in terms of 1 and 2 shall have the provisions for separate approval or not. So this is the ultimate. Finally, the COC has to decide whether this resolution plan is having some kind of complication, and therefore they will say that keep the distribution separate and keep A part separate and B part separate. So these are all the discussions, Ankit, that we have. So we have 15 questions as I could read. And as far as the discussion paper on the real estate is concerned, that we will try to handle next week. So we can take up some questions on this, Ankit.
So, questions from Mr. Hari Prasad Ruru on, what I was exactly thinking is that does it mean that the adjudicating authority approves Part A only in the first instance and subsequent approval to be taken for Part B?
You see, it is open to the adjudicating authority that first part would be approved separately and second part would be approved separately, or second part can be kept in abeyance till the time other IAs are disposed of. But the first part can be done, and that is very, very easy for the implementation of the resolution plans.
Then Mr. Jain, Aryan Jain is saying that order of priority may not necessarily be interpreted to relate to first charge or secured charge, etc. It may refer to the order of priority as mentioned in section 53 in general. So that's what we were saying. That's exactly what we were saying, that this is yet to be clarified, that does section 53 distribution also take into consideration the value of secured assets to a secured creditor, or is simply classifies somebody as secured creditor for their entire outstanding amount rather than limiting it to their security value. So then we have order of priority. So yeah, order of priority is taken care of. So yes, I believe there is a remark from Mr. Hari Prasad that the amendment in the valuation aspect affects the independence of RVs. So there is a, if somebody said that, okay, you share the valuation methodology with everyone, that's something different. And I believe the earlier proposal was that the draft valuation report will be discussed by the RP before the COC members. And now there is a change, and the change is that at the time of appointment or whatever fair value, liquidation value, the valuation methodology will be discussed by the valuer. And
could you find that regulation where the RP RP is presently also required to facilitate a meeting between the valuers and the COC?
It's not in the regulation. It is only something that some RPs do because the COC wants them to do that. But that facilitation is also limited to the final valuation report. It is never for the draft valuation report or to discuss the methodology. So, because presently what is also happening is that the RP and the valuer work together in doing a valuation report, and the valuer is not even discussing the valuation methodology with the RP at times or with the COC at all. And therefore, at a later juncture, the COC and the RP are, in a fix where when they find that, oh, this valuer has done this job, but this is not the methodology that we were expecting, or this was not the valuation methodology that should have been adopted. And when we say valuation methodology, we are talking about different approaches to valuation. We are talking about different the way in which the valuation will be done, the information that might be available or not available, and what information can the valuation be done. We're using valuation methodologies that to explain the method of computing that value and the way of computing it. So if let's say if it's a going concern, then sometimes the valuer will simply give the cost basis valuation without giving a income valuation at all. So I believe that is the objective of bringing this on table. Second, the values will certainly become more accountable to the public at large with the fair values being published. Because at a later stage, in case the fair values are not achieved, currently, there is a garb of confidentiality which also protects the valuers in that sense that valuers can give a value in the report, and that value will only go to limited people in the whole process. So it will never go to the resolution applicant. It will not go to the people who are contesting the resolution plan. So now when fair value becomes public, it is part of IM. Anyone can go to the court. Maybe the promoters will also go to the court and say, see, the fair value was 100 crores, the value plan value is 60 crores. Why is the COC taking the decision to giving a 100 crore fair value company for 60 crores? So I think all that will start, and therefore this fair value will become very, very contentious, very, very important, and the values will need very, very strong basis to give that value. So apart from that, 19.2 application pending, yes, we understand if 19.2 is pending, information will be delayed, and if information is not available, yes, everything will get delayed, but then the process still needs to be carried forward in whatever limited way it can be carried forward. That is what I understand. Then there is a question from Mr. Raju Patel. He says, does COC have authority to challenge valuation methodology? Does IBBI have authority to dictate methodology of valuation, since recent actions against some RVs are based on methodology followed by the RV, which IBBI do not find to their liking? So it should normally be about, these any profession follows standards, and if the standards allow for the methodology to be conducted by the RV the way they have conducted it, then I believe that it will be perfect. But most of the RV orders that I have seen, I believe they look into the valuation standards, and then they say that yes, maybe this was the duty of the RV which he has not performed. Some of them might have been those where the methodology was not to their liking, but mostly it is about not following the standards and not disclosing things in the report. So when we do valuations in AAA valuation, we always make sure that we will follow the standards to the core and give all the explanations in our report itself. So that makes a lot of difference. That's what I think so.
I think all the questions are taken care. In the next coming Saturday, we will be deliberating on the discussion paper on real estate projects. We will also try to add some latest judgment on the security interest kind. So we'll discussing that in the next coming Saturday at 11 p.m. In the meantime, I wish all my friends, dears, audience, the viewers, a very, very happy Deepavali. And I wish that this Diwali be prosperous and healthier for your loves and dears. Thank you very much.
So happy Diwali to everyone. Happy Diwali to all our participants, and hope you have a very, very prosperous, very, very happy, and a very, very festive Diwali. Thank you, everyone.
Thank you. Thank you.